All right, guys, here we go again with another of our Evolution Consulting market update videos as they have come to be known. This one being recorded on the 23rd of September, about 1:30. Okay, and that's obviously still during trading hours on this quite lovely Friday. And not surprisingly, guys, you saw yesterday, I treated myself to a little bit of a cocktail and, made the smug face, which I'm doing again now. Because once again, guys, I mean, we're coming up now on, I want to say about 2.5. I said 3 on Twitter, but about 2.5 years of pretty damn flawless FOMC, central banking Federal Reserve policy forecasting. All right, guys, we called a no rate hike. We called it as far back as the beginning of 2016. We mentioned it, I don't know how many times throughout Wirehouse and these market update videos and also on Dr. Janda's show. And we've accurately forecasted that. That was the one and only rate hike, guys, 25 basis points. That was it. Okay. And I'm not going to go through all the reasons as to why that is right now, but we accurately forecasted it. We said it's just going to be lip service now until there's a new Fed chairperson because, as we forecasted months ago, as we mentioned in Switch and Signal, as we mentioned in a bunch of other our market updates and our info updates, guys, the Fed has just lost all credibility. It just has, okay? As an institution, certainly, and as a Federal Reserve chairperson, Yellen's done. Okay, Janet's done. Goodbye, Janet. You got the Cobra. Okay, that's what we call the Donald Trump firing. Okay, when you put one hand up like this and you go, "You fired." That's what she got. She got the Cobra. Okay, she's done. There's absolutely zero credibility in her as a Federal Reserve chairperson. There just isn't, all right? And I've said this before, and I'm going to say it again, and this is not just from Evolution 4.0. Granted, it is a lot of Evolution 4.0 research, but in terms of our network of experts that we have, guys, big banks, the hedgies, all those kind of folks, they have had it with her shit. I've said it before, and I'll say it again, and I've spoken to a number of people, and they have had it with her shit, okay? They are just done with her, all right? You got to understand something. As much collusion as many people think goes on there, the big banks and hedge funds, they would rather not even have to deal with the Federal Reserve. And you're saying, like, well, did he just say that? What? The reality of the situation is they would rather not have to deal with that nonsense. Are they or aren't they? Are they going to hike rates? That does not bode well for an investment environment. These, big banks and hedges, they like to plan out years into the future. And when there's this constant every other month, oh, we might hike rates, maybe we're going to hike rates, like that stuff, that just gets irritating after a while. And they're done with her, okay? And that brings into question the validity or the requirement to have a Federal Reserve System to begin with, all right? So that's something that we forecasted, I'm say a year or two ago, is where we said the Fed is just going to become increasingly more irrelevant. And this most recent, guys, and I hate to, I'll tell you the way it is, all right? Every time she comes out and opens up her mouth, all right, it's almost embarrassing. Okay, and that is for those that know economics, for those that understand what's going on, for those that understand the physics and the mechanics of economics, to watch her come out and make those presentations, be that at Jackson Hole, be that at, the most recent FOMC, guys. We've said it before. She should probably take some of our advice. Don't ever go full retard. She went full retard more than once. Don't do that. All right, it doesn't look good. It's not a good look, if I can use an intellectual or an internet colloquialism. It's not a good look. But the point of the story, though, guys, as we see the Fed become more and more irrelevant, Jamie Dimon recently came out and made a very interesting statement, and it echoes something that we have mentioned months ago, a year ago. And this is a little bit of what Mr. Serrani, our chart expert, our technical analyst, what he came up with, which is, and he said it very plainly. And I've mentioned his quote before in a market update video. It was, Nick, even if they do raise rates by 0.25 basis points, who really cares? It's like a quarter turn on the valve of a fire hydrant that's been open for 6 months. Who really cares? The damage is already done. And he's 100% right there. And as I so often say, it's not always what you say, it is how you say it. There is something to be said for that. The reality of the situation at this point, guys, is that who really cares? And as we said on Dr. Janda's show, they can't raise rates now. Look at the BOJ, guys. BOJ is going deeper into negative territory. We know that's going to happen. They undershot their goals by a lot, okay? And they're talking about they're not seeing inflation yet. Deflation is the enemy, like that kind of thing. Just get real, please. All right, and then you got the ECB. I put up an article yesterday on, or I retweeted an article on Twitter about exactly what we said. The ECB is going to have to pull a do-over. They held rates the first go-around, and then now it's like, oh shit, we need more stimulus. And the reality is they have to, guys. Otherwise, the whole fiat Anglo-Western banking system just implodes. Okay, that's just the way it is. All right, I think there are those that are on Wall Street. There are those that are in positions of power and finance that realize that the writing is on the wall. They're well aware of that, and dare I say this now, I'm wondering how many of those institutions are seriously thinking towards thinking of pivoting towards what I call the newer financial order, the new financial order with the BRICS nations. How many of them are really quietly starting to think about making that pivot? Because I think even anybody that's got a functioning frontal lobe that understands economics to even a basic level, he has got to look at what's going on now with the Fed and go, "That's it, guys. You're done. Have a nice day. All right, it's over." So, point of the story though. We were accurate in forecasting the Fed again, and it's the metals reacted as we figured that they would. Though there is a though, and there is a caveat, and there is an asterisk. Okay, for those of you that I know, one of our switch and signal readers just put it up on Twitter. He caught the rip, as he called it, which was it was like 20-some% in one day on the ETFs, on JNUG and NUGT, guys, as we forecasted in switch and signal. All right, and I had a bunch of other plays in there. I mean, we got this week very right. However, there is a however there, and we're going to tell you, we get one wrong, we're going to tell you. We didn't get one wrong, but we didn't get it as right as we would have liked to. How's that sound? We're seeing now something very odd, which is we look at gold, we're back up around 1340. We're right around $20 for silver. And the ETFs just haven't quite reacted the way that we'd hoped that they would. All right, so as I'm going to kind of sneak a peek over here now at my very snazzy market monitoring software. Yeah, we're down almost 9% on JNUG, guys. And we're talking about gold's been the highest it's been for the last couple of weeks. And so I'm sitting here scratching my head. I chat with some of our customers on our messaging platform, and they're kind of like, the fuck? And rightfully so, 100% rightfully so. And what we're seeing now is really the decoupling of a lot of these ETFs that we like to talk about, be that your GDXJ, USLV, SLVP, NUGT, JNUG, all those. We're seeing a bit of a decoupling there. So they are really becoming more speculative instruments than they are correlated to spot pricing. And guys, we got to do some research. We got work to do. And that's figure out why the hell that happened. I mean, gold at 1340 right now, guys. JNUG should be way higher than it is. NUGT should be way higher than it is right now. And we're starting to see the effect of two things, and this is just from a quick scan bit of research that I've done. I'm not going to pretend that this is hours and hours of research, but the quick scan that I've done with 4.0, specifically the stuff that we use to research precious metals. Try that in English this time, and that is those ETFs now are really actually being used what they were meant to be used for. They're speculative instruments. So you got a 20% rip. Yeah, there's going to be some selling. And you got to remember how many times people have been, they've been in those looking for a little bit higher, a little bit more, a little bit more, a little bit more, and then they've lost that rip. So it's a little bit of, shoot an arrow and paint a bullseye around it kind of thing. But as far as why those ETFs aren't higher, and then they've gotten the pullback they are, just keep in mind the timing, guys. All right. Number one, we're going into a weekend, obviously. Okay. Number two, most people are going to think that Federal Reserve no hike, that was a day trade or that was a swing trade. And we do have one customer that played it as a swing trade. That's great. Okay. But a lot of the stuff, the thing to understand now, I mean, like I said, if you're more hands-on and you're more of a, an intraday, or not an intraday, but more of an extended swing trader, yeah, you're going to get those rips and you're going to get more gains. For those that are more the sit back, relax, and, let the market work for them kind of thing, all right, here's the deal. That Federal Reserve no hike, that's what we call a long-term catalyst. And when we say long-term, or I would say mid-term catalyst, okay, we're talking about for the next year, okay? A lot of those catalyst events that we've been talking about, okay, the Fed no hike, there's one down. Okay, the BOJ, that's coming up. The ECB with stimulus, that's coming up. Trump mentioning a metals-backed dollar probably at some point in time during one of those general debates, that's coming up. A Trump presidential win, that's coming up. Okay, so those catalyst events now, they're going to become more intense and they're going to become more frequent. All right, so that Federal Reserve, that to me, that no hike was pretty much the all bets are off kind of thing. All right, because now we know we're not going to get a rate hike until at the very least December, and certainly by a new Fed chairperson. As we said, Janet's done. All right, she looks like she just got slapped around and thrown down a flight of stairs, swung at and missed, shit at and hit. All right, just I'm going to almost use the word incoherent. Okay. I don't know how to put that any other way. As far as, but the overall outlook for gold, it just got a lot better. It just did. Precious metals investors rejoice. It just got a lot better because what we've seen now is that was the last sort of speed bump, so to speak, on the way to much higher spot prices. Now you got the SGE. Their system's becoming more powerful every single day. All right. And there's all those catalysts that we've been talking about. Guys, we've been talking about these in Wirehouse now for months. So anybody that's reading that stuff, I mean, it's not like it's news to you. It's just you're seeing a lot of the stuff that we forecasted starting to happen. When it's one right after the other like that, that's how you build a trend. One event does not a trend make. A series of them, okay, makes a trend. And that series of events, and that's why we've been telling people, be patient, be patient, be patient. Guys, I have no fucking vested interest whatsoever in precious metal sales. Okay, I'm not a broker dealer. I'm not making money off you guys churning and burning in transaction. Information is the business that we're in, so it's in our best interest to be as accurate as we possibly can. Okay, so the reason I say be patient, wait for it. You saw with the Federal Reserve. Okay, you saw with the FOMC meeting. We knew that was going to happen. It was obvious. Okay. But a lot of those catalyst events that we've been talking about, they are starting to happen. So stay tuned and stand by because I can tell you the next one is going to be probably the BOJ. Okay? In speaking with some of our network of experts, guys, remember that prediction we made about Germany making a pivot towards the BRICS? That's going to happen sooner than I think even we think. All right, you see what that does. You let me know what an implosion of the euro, the EU, and possibly the euro dollar does for the price of gold. Okay. But as far as the ETFs, guys, we're going to do some research into as to why there's just been such a decoupling. Surface level research is the fact that, especially those triple leveraged ones, guys, those are very, very, very speculative securities. Okay, those JNUG and NUGT. Yeah, you know what? If you're an institution, certainly if you have price discovery, and certainly some of those trades went off from the Far East. All right, yeah, you're going to take your 20, 25, 30% rip, and you're just going to go self high five, and life is good. All right, so for those of you that missed that, if you held it and you're looking today and you're going, holy shit, I missed it, I'm down 10%, that kind of thing. Wait, okay. Like I said, just take a look at a historical chart. Okay, when you see this kind of thing going on, okay, you can go as far back as the beginning of this year and look at NUGT and JNUG. Guys, they do not go vertical. There are those pullbacks, but I think what we're going to see now is a major trend higher. So that being said, guys, as always, if you have questions, comments, bitches, gripes, moans, or complaints, you can save the latter half of that equation because we checked recently, and we do still give precisely the square root of jack shit about the latter portion of the equation. However, constructive criticism, feedback, ideas, thoughts, etc., somewhere over there, maybe over there. Is it over there? It's over there. Info at evolutionconsulting.world. Info at evolutionconsulting.world. Guys, email us. We've been getting barraged with emails recently, and you guys, as always, the words of encouragement. Okay, the encouragement from people is most appreciated. It really is. It like I said, we have our days where we go, what the F do we even bother doing this for? And then somebody will email us, and it's like, oh, yeah, that's right, because there's a 10% that's actually got their head screwed on, right? So that's who we're here for. All right. And, of course, if you want to follow us on Twitter, it's Evo. It's at Evo_consultants, at Evo_consultants. Do feel free to follow along with us on Twitter. All right, guys. And, of course, if you watch the info update video, we're getting ready to record in all of our 2017 podcasts, be those video or audio podcasts. We just ordered a butt ton of some pretty kick-ass AV gear, so we're pretty excited about that. Me being a big nerd, of course, that makes me happy. And we're also compiling our Grant Street Notes series. So guys, as those are released, we'll be putting Twitter stuff up. We'll be sending our customer base emails and stuff. All right. So as always, guys, thank you for watching, and be good. Everything really is a transaction.